trades of the previous week. So back at it. As you guys have seen, I mainly focus on these three pairs: UUSD, GPUSD, and GPY. Why do I do that? I do that because well, you need to have your focus on as less as possible things that you can have, because if you have your focus on so many pairs, it can be distracting for you, and also you can lose your focus. So I can trade any pair if I want, but I choose to do not in order to stay consistent. Yeah, last week we took quite some great trades, by the way. So we started with some trades in the beginning of the week. This was the week. We started with this just huge drop on GBP, GPY. So let me break it down for you. Very simple, nothing special. What do we see here? We see here a great zone with a couple of factors, right? So this zone is a swing point, as you guys know. For the ones that know, of course, this is a swing point. So we had a very high volume resistance. Western technical, we had some indecision candles to the left. Of course, this was the ultimate liquidity wick on here in terms of the range. So I expected the price would touch this range before it came down. So notice now what we see here. Look at the position of the close. Right? The position of the close is a key factor.
Yeah.
If price closes back in your range, that's a huge indicator that you'll probably go down, right? Because you're ranging, you have a high volume resistance here. If you go here, I don't see high volume resistance, but it's still a security cap. But this range is very crucial. Plus, it closes below this range and closes below this range as well. So that close is very powerful in terms of direction. So it doesn't mean that you only need one sign there to take a trade. You need to combine a cluster of signs, because one sign doesn't tell you anything. So what I do is, okay, so what I did was just wait for a price action signal. So in terms of price action signals, I don't focus on 5 minutes anymore. I only focus on 30-minute entries or 1 hour entries. I love the 30-minute more because it's closer to 50 minutes. And therefore I focus on 30-minute entries and 1 hour entries. I focus on a couple of things, not to make it very complicated. I can make like a whole story for you, but that's not necessary. I focus on a couple of things. I first check how the candle is closing, right? So the candle closed on 1 hour in the range. This is a pin bar as well. So that's, for me, this one sign. And I go to 30-minute and I see, okay, do I see on 30-minute more signs? So if you know this candle formation, this is a harami. So it's not the strongest formation, but it is a sign as well on top of the 1 hour pin bar. And then if you go to 1 hour, I see a confirmation as well, because this is a 1 hour engulfing. This is a 1 hour engulfing, and this is a 1 hour engulfing. So when I saw this 1 hour engulfing, I entered, simple. And then I waited for another confirmation, which was this break of structure here, right? And that was, for me, another confirmation that we're going down, because this break of structure was, one, a break of structure, and it was a second engulfing as well. So that was, for me, the reason to pull the trigger, because I counted my cluster signs on 1 hour and 30-minute. The reason I'm trading 1 hour and 30-minute, if you know Steve Nissen, Steve Nissen is one of the most famous price action trader that is still alive, by the way. He uses Japanese candlesticks. There's a book that he wrote. I will share that. It's incredible. There's no other book better than that book in terms of price action signals on a Japanese candlestick side. So these are all Japanese candlesticks, as you can see. And when you combine that with the ranges and with the Western signs and technicals like the support and the resistance, etc., it's very powerful, because then you have like more more confirmation on your key levels, and you have more confirmation on your entries. But in terms of entries, I don't deviate from 30 minutes and 1 hour engulfing. I'm not saying that you can't take a 15-minute engulfing. I'm not saying that, because you will see those. Well, in this case, you did not see a 15-minute engulfing, only here, but it's quite late. And therefore, I only focus on a 30-minute or 1 hour engulfing, just to be specific. Yeah, and then GJ dropped. I believe I got like 150 pips on GJ on a trade. And then this was, yeah, that was GJ. So let's go to GU. GU was back to back, same stuff, back to back. I must say that sometimes I try to use FIBs, and the only reason why I try to use FIBs when I see a very clear structure break. But you guys know, like, FIBs you can use only to catch the correction of the current trend, right? So they're only effective on 30 minutes and 1 hour, in my opinion. So on GU, I grabbed quite some trades. Just to show you some example, this is a simple FIB. Simple rules. You need to have like a breakup structure, right? So this is your structure. And once again, I'm not telling anything new. There all this information you can find on the internet, etc. But the most important thing is that you know the correct stuff, right? So don't like, the information there is one, but the understanding is two, right? So you need to have a breakup structure. So this structure to the left breaks, right? And let me show you a difference between breakup structures, because many people don't get this. If I delete this one, if I show this structure, right? This is a structure, but this is not relevant for me. I want the left structure to break. These structures I want to break. I don't want price to make a own structure and then break it. No, I want this structure to break. This is a left structure. This is the left one. This one I don't like because it's in the move, right? So I need one where you can see like a clear gap and this left structure being broken. And then when that happens, you're able to draw your FIBs. The reason why you're able to draw your FIBs is, one, with the breakup structure, direction is determined, right? The only thing that's not determined is how deep it will go. We don't know that. Okay. And because you don't know how deep price will retest, because price can retest to 50, price can retest to 62.8, or price can retest to 0.79, or price can even go and wick down to 100%, right? Okay. One thing you shouldn't do is just blindly enter on these lines. That's stupid, because it can just blow through your fifth level. What you should do is wait and find a price action signal that tells you that you're going up. So it tapped here. This is a bullish harami. You could have ended on that, but I love to wait for the 30-minute bullish engulfing. And then when I do that, I put my stop loss just safe, just below this structure, and then I take this trade. So if I'm trading off ranges, or if I'm trading a retest of a FIB structure, right? I'm still looking for the 30-minute engulfing, right? So this is a 30-minute engulfing, just to explain the engulfing, because many people don't understand engulfing, even though I am like, some people say, oh yeah, but the engulfing needs to close past the wicks and da 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 da. No, engulfing needs to close past the body. If it closes past the wick, it's fine, right? But it needs to close past the body. Simple, right? I must say 7 out of 10 engulfings work. And always keep in mind that you can have a slight retest that here, like, so keep that in mind. So keep your stop loss just like a bit safe below this wick, just to be safe, right? Some engulfings, like for example, this is an engulfing as well. They leave right away, but the thing is that the market is never 100% sure. don't try to be 100% sure. Keep some room for a trade or two that you're able to lose. But the thing is that once you have the comfort in order to trade off your levels, and you have the patience to wait for this 30-minute engulfing, right? Then things will become way easier. Also here, in terms of this trade, I took this sell. Even though it was a counter trend sell, as you can see, I read structure, right? So higher high, higher low, higher high. It came into this range, Lookout closed below back in the range, followed by pin bar, engulfing. That was my sign to enter. So the, how do you say, the law of three, the rule of three is very important in trading. So if you look at your key levels, try to find 3 reasons why this key level would hold. If you're looking at your entry, try to find 3 cluster price action signals that would give you the confirmation. Like for example, here on this fib, right? So this fib coming back, right? It had a confluence with this support. Then it was a bullish harami, and then if you would wait it, then this third signal was the bullish engulfing, and then it went. So it's all about patience, even though people can get quite excited sometimes. All right. So yeah, so basically I'm trading of key levels. The most easy key levels are of course of 4 hour, right? So when price comes into 4 hour, and then look how price rejects from 4 hour.
For GU, yeah.
Yeah, so that's quite important. I'm not saying that I'm ignoring any how do you say, I'm not saying that I'm ignoring any fundamentals. Of course, we know that the market currently is quite fundamental and da 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 da. But eventually, when price comes into a key level and it gives you a price exchange signal, that is for me also fundamental, because the buyers and sellers are deciding what's happening. Just to give you like a great example, like for example, this was a push, this was a fundamental push by the interest rates, but yeah, fine, it comes into this level and it goes below, and then it still gives you a 130 pip trade. So we don't care. So we don't try to forecast the whole market. We just want a piece of the market, right? And it over and over again. Nothing more than that. EU. Yeah, this is a great example where I explained to one of my students like in detail how I grabbed this trade. Yeah, so indeed how and why I got this trade. So this was a clear 4-hour range, right? I think this is pretty clear. 4-hour zone, 4-hour range, beautiful. I also see a clear high volume resistance as well. Yeah, so this was also like a, how do you say, like a V, right? So this and then this and then drops. So that gives you an extra edge in terms of direction, but all fine. But the thing is that even though your zone looks so great and so good, you can't just take it based on the zone. You need to look how price is projection of that zone. So let me look at what happened. So price came in, right? Price came in, first step, boom, first step, boom, past this range, it goes below, right? So that's for me an important indicator. Past this range, it goes below. What happens next? Okay, next, what happened next is we got a bearish harami. So that's a sign too. I could have taken it on a bearish harami, on which I did, by the way. So I took it on the bearish harami, and I took it on this 30-minute engulfing as well, right? So I took this 50 pips, this whole 50 pip move I took. But one thing you need to keep in mind, when prices break structure, you need to expect this retest, right? Because when prices break structure, it needs to make another structure in order to proceed. See that? In order to proceed. So when price, like a lot of people think, hey, price is breaking structure, I need to keep selling here, and then they're being caught in this pullback on this drawdown, and then they're out. So when price breaks structure on 30 minutes, expect the pullback on the fib, right? Expect that. So it's a given. It's not like something you need to think of, but it's a given that you always need to expect the pullback. So yeah, so what did I do? I expected the pullback. I saw a confluency on a 30-minute resistance here. And to be honest, when I got this and it closed inside this range, I loaded the boat because direction was confirmed. So this was happened already. So this is already 1. This is 2. This is 3. Retest for even better. It never even reached the 100, right? And then it went in one push. It went for 95 pips. So patience is required. So do not forget that even though you're right on correction, it doesn't mean you need to skip the break of structure. When it breaks, you expect a retest. Always, never skip that. So yeah, I caught this move, this first move I caught, and then I expected a second move. Also, if you don't like fix, all fine, because you can grab that move in many ways. This is, for example, a ABC pattern, also called the Elliott pattern, blah blah. They all give them names. I don't care, but it helps you read the market because you have a point, right? It's your starting point, and this point B, it breaks your structure, right? So if you know that that A to B is a point, right? B to C is being made when a correction is being made. So there needs to be a move. It's not one candle. It needs to be 2 or 3 candles to make this C, right? So, and then when you have B to C, you can expect D. And D is, if I say by heart, it's 127% of B2C or 150-ish% of B2C. So when you know that this is A to B, and you see that B2C is forming and is rejecting your point here, then if it doesn't go more up, then you can expect this whole move to be made by D, right? And if you look at D, you know, you can target in terms of how do you say, in terms of TP, right? You have certain levels of TP on fibs. Now the most common ones are the 0, but the most used is a 0.27 as first one, and the 0.618 as the third one. So those are the indicators of TP, but I always say take what you get, don't be greedy, because otherwise you get anything. So yeah, so I really focus a lot these days on this ABCD of 4 hour especially, because the reason why I focus on that is because in 4 hour and daily zones, price will always consolidate, which means that price will always do this first, boom, boom, and then sometimes it even does this, and then it retests this B, but doesn't close up, because it's an important rule that this one doesn't close up, and then it goes, right? So this is a variation, but our 4 hour zones, daily zones, and weekly zones, you need to expect that price will it'll give you a consolidation. Yeah. Any questions so far?
No, sir.
Okay. All right. So, and then GJ, late on Friday, I took this GJ buy, a friend of mine, and on the first, like, this zone was like just incredible. So I was like, this is a huge swing point zone, backed by another zone behind it. So I was like, okay, there will be a trade out of this trade. So on the first, so it came in, right? But I didn't see any engulfing or anything in here, like no price action signal on 30-minute. Like I don't look at 50 minutes because yeah, it's not strong. 50 minutes it's just not strong. It's not a price, it's not a signal. Like it's very weak. So I was like, okay, I don't see a 30-minute engulfing here. I only see the bullish Harami here. But it's one signal. I was like, should I take it? And I was aware that okay, there's a trend line here. I was like, okay, you know what I'm doing? The only signal that I'm seeing at this moment is this bullish engulfing, right? So I took this bullish engulfing buy. If I look at it now, it gave me 27 pips. I'm not saying that it was totally wrong, but the entry was too FOMO because I had in my mind this zone is too great, and it is a great zone, but I was not patient enough on this signal. So I was battling my friend. He's like, "Yo, this is not an engulfing. So let's see how it works." And da 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 da. And I was like, yeah, I'm pretty confident because a 30-minute candle signal is a great candle signal. So I was so confident that yes, eventually it will go up. But one thing I missed was the structure. See that? So price broke structure. See that? Price broke structure to the left. So when price breaks structure to the left, it will go for a retest, right?
Pullback, yeah.
A pullback, yeah. So I thought like, okay, this pullback had happened already, so it could give me like a push, but it took me out here. I was quite loaded. It took me out, all fine, and then I was like, let me look and check what this guy is doing. So then it went to 61.8. I took it on 61.8. In this case, on 61.8, I did take it on the 50 minutes because yeah, it was like too clear that it didn't break even further, right? So this was the only moment that I took it on 50 minutes because it was late on Friday. The volume was drying up, and it was like, okay, this could be like the
Yeah,
low
Friday.
of the week. So I took it again. So and I make a huge profit on this trade, and then boom, 50 pips. Yeah. So in terms of the engulfing, I also like 1 hour. The only thing on 1 hour is that you can have a retest. So I enter on the close and I wait for a retest to enter a second one, and if I'm good, I enter a third one. But you need to spread, of course, your risk, yeah, on time. And let me show you how powerful the 30-minute engulfing is if you're correct on direction. Like for example here, right? Very simple drop, lower low, price is moving towards the trend line. It gives you a 30-minute engulfing, you put your stop loss here and you ride this whole wave, right? And then you wait for the next one. Like this correction is too short in my opinion because I want a expansion towards the trend line, right? I want to see this. So in this case, I will take this one. I will be taken out, right? I will be taken out. It's fine. It can happen. But then on this one, because this is also engulfing because the bearish body closes past the bullish body. And this was a trade actually that I took again. I was taking out here in Asia, correct? Yeah, and I took this trade again on this engulfing. So please be aware that when you have low volume, that engulfings don't work the best. So try to take them in the sessions or at the start of the session because then they're very accurate. So I took this trade again, and then in one drop, I got this whole move like 200 pips in one drop. I think I posted that. So then you see how powerful a 30-minute engulfing can be and is if you take them at the right areas, right?
Yeah.
So that's crucial. Yeah. So so in terms of preparation, let me finish off with some preparations. Of course, we always go. Yeah. Of course, we always go top down, top down. Yeah. So it's in the monthly. So consolidation, weekly. This guy closed up. Didn't touch this yet? Okay. Breaking structures, breaking structures, breaking structures. Okay, this time, yeah. Okay, I'm very bullish on GU still, um, because this guy is going for this range on this structure. So on market open, so let's say in Asia, wow, this is also bullish engulfing. So in Asia, what I expect is the following, and I expect, yeah, so I expect price to give me like a deeper pullback a little bit, and then from here on, because this is a incredible high volume area, this one it will reject, and then it will run for the day. Of course, I don't have a crystal ball. I'm just forecasting what I can potentially get for Monday. And what's important is on Mondays, you always get a rally, like some days, and especially in these
Line share, yeah.
exactly, then like you get a rally because on Friday the report for the CTP report. I'm not sure if you know the CTP report. The CTP report comes out. Okay, the CTP reports come out. I'm going to exchange. Yeah. Yeah, so the CTP reports come out, and there you can see what the institutional investors are doing. Are they long? Are they short? Let's see how fast this is. Oh, no, there's some website. Yeah, this one. Commitment, yes, the commitment of traders. Data commitment of traders report. Commitment of traders report. Yeah, this one. Yeah, all right. So just to give you, yeah, like I always follow price action. Of course, you need to forecast what things are doing, like the price and the interest rates are going up, etc. So you need to have like some information about it and a feeling of that. Okay, like what can happen in combination with my price action signal. Okay, the commitment of traders. So this is a commitment of traders report published by the Commodity Futures and Trading Commission in the US. So here you can see the commodities, but you can also see how currencies are doing. So here you see the Chicago Mercantile Exchange, and then you can click on the long format. Okay, here you see data, right? So you can see, oh, you see butter, here you see milk, and every commodity you see, lean, random, everything. So let me put on euro. So if I put on euro, you see here like, okay, here's euro, right? So you see open interest is what is currently running. The non-commercial are actually, how do you say, the the governments, and the insurance. The commercial are the brokers, right? So if you're looking at the institutional, then you're looking at the non-commercial. If you're looking at the commercials or the brokers and the guys in between, that's the commercial part. So here you can see, okay, what's long and what's short. So these guys are 200,000 ish long, and this and on the sell side they're like 240k short. So they are more short than long, right? And these guys are more or less break even, right? Are more or less break even, and here you see the total longs and short. So you do see a kind of a balance, but if you look at the bigger guys, they are more short than long, and that makes sense. So which conclusion can I take out of this? Yes, the Eurozone is increasing the interest rates. I agree. The US is doing it as well, but the Eurozone is doing it on a lower pace. So it means that if the euro is doing it on a lower pace, the dollar is getting stronger and stronger. So I agree with this short, right? So this is just a confirmation that these big guys are still short on EU, even though it's temporarily bullish. And if I go back to yes, if I go back, hey, we are temporarily bullish, but if we're temporarily bullish and we enter into this zone, right, we can get this move again because overall the big guys are still selling because Europe is not coming out of that oil and gas crisis very shortly, and we are going into the winter. And in the winter, people need oil and gas more than now, right? So it's logical thinking, right, in terms of the macro economics. So yeah, just looking at GDP, for example, let's check GDP. Your this is your GDP, EJ, and so you have like all those pairs, so you can see, okay, I forecast my chart, I charted it, but what are the big guys doing, right? So this is like a GBP pound. So GBP pound here, you see that that a lot of people are short. A lot of people, no, because it's not people. A lot of large institutions are short because these are not the people. Uh, that makes sense because there's a lot of going on in the UK on politics, etc. So that can affect currency as well on the short term. And this is a report that comes out like every Friday, and it contains data of Tuesday, to be very short, right? So you see July 26th, right? So it contains data of Tuesday. So on the 26th of, you see the last Tuesday, 26th. So on the 26th, these guys went long, and and these guys went short as well, right? And then they went more here. They went more short than long. And if you look at that, right, they went more short than long. Let's look at GBP, right? So they went more short than long. And the funny thing is that we as retail traders, we don't get this data until it's Friday, and the whole price action, it happened from Tuesday and going into Friday, right?
Okay.
So if you go, yeah, so let's see. So if you go to 20, selling, 25, 25, 25, and this was like the institutions were temporarily wrong because the interest rate like increased, right? So they can be wrong as well. But the thing is that they have so much money that they can put longs and shorts, right? So it went up, boom. But because they are heavily on the sell side, that makes a lot of sense. You saw this wake up and then it boom blasted down, right? And this is just the power of those institutions. So it's great to see, but if you look at these numbers and you go back to your chart and you say, okay, on the 26th, they were like more short than long. So were they right on the price action, and then you can check back and to see if it makes sense. Let me check GBUSD because sometimes you need to.
Wow.
Yeah, it's crazy how it works. GBP, Euro GBP. Oh yeah. So you have Euro GBP and then USD. Let's see. So it's good to have like a kind of feeling on what they are doing. So you can see, okay, if they are, for example, now, right? So they are more short than long on Tuesday. So on this Tuesday, they are placing like new bets, and they are placing on new bets based on the forecast that they have on the economics, right? So are they bullish or are they bearish? And they're trying to push the market with the orders, and they definitely did. Like how can you have like like such a big move and then you have this move like way back to the first point? Like they're not trying to lose, right? See that? And that's the whole story of the game. So always protect yourself. That's key.
you.
Don't go lower than 30 minutes in terms of your price action signals. I will share a great book. Read that book. Like if you want to improve in your field, they say like read books like 1 hour a day. And then you get like new information. And yeah, since my trading journey, I I I chart every day. I see many things, and if you say, no, you know what, let's check what some other people are doing, and then you go to Amazon, and then you see, okay, these are the best books that have ever been written by traders. Then you read, right now, okay, now I see this, I see that, okay, it works, and then if everything ties together, then you say, okay, it really works, but you know that it doesn't work always, right? So you need to get some comfort on that one. Okay, man. That was it for this week. It's a wrap. Do you have any questions before we close out?
No, I've just been taking notes. Thank you for the lesson. I need to use fib more often too.
Yeah, yeah.
'Cause-
One thing that you need to really need to remember that break of structure, right? It confirms your direction, but many people they get crazy on the correction, right? They get crazy because they think, okay, I know. For example, I have had students that had like other mentors that traded FIPS and they just enter on a 61.8 or they just enter on a 79.0. It's nothing wrong with that. But if you want to do it like on a more advanced level, then you just wait for a price action signal. And that's just crucial. Wait for the price action signal. And if you do want to just enter on those lines, do that with a fixed stop loss and and um, and just wait then, right? And it takes longer. But if you have like a price action signal, it can take two or three candles and then it leaves, right? Yeah, I also have a friend of mine. He trades 4 hour engulfings. Those are just for the swing traders. Like for example, just go over your chart randomly and just check like for example, this is a 4 hour fib, right? 4 hour fib. I try to use fibs on it, and you see here, okay, low correction. Well, here you see a bearish harami, and then okay, here you see a 4 hour, right? So this 4 hour engulfing caused this whole price to go down, right? Because how do you say, um, in terms of statistical proof, is that the first signal that you get on your chart is a price action signal. It's not news, right? If your price action signal is supported by news, then you're fine. But the first signal that you see on your chart is a price action signal. If you don't see that, then what kind of reason there is to take a trade if you don't see that, right? So in this candle, there are buyers in this candle, right? This candle, there are sellers taking over these buyers, right? So that's like a simple confirmation. The only thing that a lot of traders fear is, okay, do I enter here or do